Has it bottomed out in the market? Can the bulls rest easy now, right now? Hello everyone, welcome to Classic Technical Analysis. Let's take a look at Reuters CRB index today. So everyone sees that inflation has gone down, right? All right, this is when we were actually accumulating strength here. And then, there was a significant breakthrough at this neckline, right? When it breaks through this neckline, we say inflation is coming. If you don't buy today, it will be more expensive tomorrow. Last June, we had a false breakout, and our inflation peaked at that point, reaching over 9%. So, at the time, it was like this, breaking out and strengthening from here. This is the completion of the bottom, and this is the breakout of the neckline. Now, look at where the CRB index is. Let's not compare it to the lowest point. Let's use the normal value. The normal value over the past few years should be around here. All right, so where is the CRB index? Right now, it's fluctuating at the top. Sigh. Because in the past few months, it's been compared to the previous high, meaning this is after deducting that. It's a high base, that's why it dropped. Look, these are just numbers. It's a numbers game. In reality, has inflation really come down? It's still very expensive. It hasn't dropped to this level. There will be an inflation 2.0 next year. Besides the rise in raw materials, prices won't come back down. For example, the construction costs I mentioned earlier, it was 50,000 per square meter. Now it's gone up to 100 or 120,000. Even if it drops, it might only go down to 80 or 70,000. It won't go back to where it was. It just won't. So, the raw materials are going up, and now the consumer end is also rising. Oh, the consumer end is rising. So here, as I mentioned, there's a pattern where it breaks the line and then comes back. So, this place becomes a strong consolidation, meaning that prices will stay high here for quite a while. Now let's talk about oil prices. If the upper limit is broken, that's what I refer to as 2.0. But you don't need to worry because, as I said, it's a speculative phase. Last year, 2021, was a year of speculation. It's possible that inflation 2.0 might happen in 2024. Currently, people are looking for speculative opportunities. So you see the Taiwan stock market rising with big stocks hitting the limit up, right? It's all speculation, but opportunities ahead. Inflation isn't going away. Look at the oil prices. Just look at the oil prices. Remember when I talked about oil prices in the past? This is a false breakout here. We mentioned that the US has been in a downtrend for a year, and from this point we can see that the US has been declining for a year. This is where the M-shaped pattern's decline is fulfilled. Well, it's just roughly around here. Oh, this big M head, a bit. The decline has reached its limit, so this is a rebound. It hasn't disrupted the bearish trend, but has satisfied it. Now, this situation is different. This is a repeated bottoming out after a rebound. So, this breakout could potentially end the bearish trend here. If oil prices can break the low point, then inflation will certainly decrease, which would be ideal. But if oil prices strengthen here, then it's even less likely because oil prices are the root of all evil in terms of prices. As long as oil prices go up, prices will soar. If there's a significant increase, prices will follow. Prices can't go back down. Inflation has bottomed out. So this term, bottomed out, is used very well here. It's possible that this is the bottom. Previously this was the bottom. So it's possible that this strong consolidation here could be the bottom, reaching the bottom. In other words, from high to low, now we are entering a phase of high-level strong consolidation. So I believe that inflation is not going back. It's not going back. I think the probability of experiencing inflation again in the future is quite high. So when speculating, you can follow the speculation, but you need to understand the background of the current rise in various stock markets. It's not based on fundamentals, it's rising due to speculation. This is what I mean, you see. Many GDP figures have already plummeted, and this means the economic growth rates of various countries are still negative, yet stock prices are hitting new highs, which is impossible to understand from a fundamental perspective. Instead, you have to look at it from the perspective of market sentiment. I've already mentioned this with Bitcoin. What is happening with Bitcoin? It's driving speculative trading, which is a hallmark of speculation. Stock markets in various countries are rising, with the US seeing gains in the 7 major full-cap stocks, and indices like the Nikkei 225, DAX 30, CAC 40, and FTSE 100 are all going up. So what I'm essentially talking about here is a wave of so-called speculative buying, which will ultimately lead to a continuous and sustained rise in prices. So this time you can take a brief breather, but is it over? I think it's far from being over.